be prepared for it to happen this year. Have enough gold and silver wherever you need it to survive the immediate aftermath of a dollar collapse. It could happen any time. It could definitely happen this year. I focus on the monetary philosophical aspect of these markets. I mean, I understand investment demand, I understand industrial demand, but monetary demand is a completely different thing, which we haven't seen yet. I bifurcate between investment demand and monetary demand because investment demand is what silver stackers do. It's like we stack silver. Why? Because we know that something big is going to happen. And whether we realize it or not, what that big thing is that an explosion of actual monetary demand. And what is monetary demand versus investment demand? Investment demand is when you stack silver in anticipation of monetary demand because you expect the monetary system to break down. And monetary demand is different from industrial demand because everyone demands money. Everyone needs money for something. Otherwise, there is no division of labor. So that's a much more fundamental thing.
When we look at the futures markets of silver priced on the LBMA or the COMEX, we're looking at the price of industrial demand and some investment demand, but not the price of monetary demand. Monetary demand is when everybody wants it to exchange for other goods. When that happens, the gold to silver ratio falls to around 15:1, as it does in every monetary panic in history. This always happens because most people can't afford gold, so they turn to silver. This is already starting to happen, but it has a lot more room to fall. It fell to 15:1 in 1918, it fell to 15:1 in 1980, and it will fall to 15:1 again. This will signal a full-blown monetary crisis. As I keep saying, everyone sees prices going up everywhere in the world. It's not a goods problem, it's a money problem. We see basic necessities going up faster than other prices. The broad inflation numbers don't matter because, in any hyperinflationary economy, basic necessities rise very quickly while luxury items either don't go up at all or increase much slower than basic necessities. We are seeing the development of a financial crisis coming to fruition. When the tide comes in, you realize who's naked. The tide is starting to come in, and people on the edges are already exposed, whether it's the UK pension plans or FTX. These things will start happening week in, week out, faster and faster. Eventually, central banks will have to reverse their policies. When they do, in an environment of inflation, everyone will flock to precious metals because that's what humans do. This will happen when central banks break and start printing again. I don't know exactly when, but they will face enormous pressure to do so. When that happens, silver will be drained from all centralized stockpiles like COMEX, LBMA, or any silver fund holding unallocated silver in the Perth Mint or Switzerland. It's all the same. They're just different piles that will be attacked simultaneously. When they run out, we win because we're stacking and not selling.
Well, we saw it once in July of 2020 when I think the number of deliveries was higher than the amount of registered silver available. And so I think JP Morgan rushed, it was like 45 million ounces from its eligible pile into the registered. I don't know exactly why they did that because I think delivery was going into the COMEX, not out at that time, but it was at least on net. So it was confusing what was happening, but at least we see the mechanism of what would happen if registered supplies go to zero. You'd see some bank or other with a whole bunch of eligible supplies put them into registered category because it's happened before. But again, the rule changes in the COMEX in 1980, they did them because they could. The situation there was we were already basically back on a gold and silver standard in 1980, at least in terms of the Fed's balance sheet, because the valuation of gold at the time was enough to back all of the Fed's liabilities on its balance sheet by over 100%. That is the definition of a gold standard. And the gold-silver ratio is about 15:1, which is the general gold-silver standard that we've had for hundreds of years before that. So 1980 brought us back on a gold and silver standard. So since we were already there, the COMEX had the ability to mess around with the rules. But if they do that in this environment where the Fed has absolutely no ability to raise interest rates anywhere near 20%, forget it, it's impossible. If they change the rules in this environment, then all the demand would just flood into the physical markets and everyone would just ignore the COMEX and who cares what they say? Doesn't matter. They won't have the power because instead of dollars trading for paper silver on a futures exchange, you'd just have that futures exchange ignored completely and physical silver would be exchanged for goods on some kind of decentralized panic, segmented market where people would be trading physical coins or some kind of reliable backing of a certificate for them for actual goods and services, which would be the end game that we're all looking at, where gold and silver become money again, literally. We've never seen in the history of the world a currency backed by a basket of commodities. That's like it's a nice, people try to spin these intellectual theories on money that we've never seen before, and I don't think are possible. Look, gold and silver are money. Baskets of commodities are not money.
Whenever countries try to use real estate, tobacco, or other commodities as money, it doesn't last long. These attempts fail because such commodities lack the intrinsic qualities that make gold and silver effective forms of money, such as divisibility, durability, portability, and universally recognized value. Real estate, for example, is not easily divisible or portable, making it impractical for everyday transactions. Similarly, commodities like tobacco can deteriorate over time and are not universally accepted as a store of value. These limitations prevent such commodities from functioning effectively as money in the long term. For BRICS to create a new currency that could supplant the dollar, it would need to be backed by gold and silver. Gold and silver have historically been trusted as stores of value and mediums of exchange due to their inherent properties and long-standing acceptance across cultures and economies. However, for this new currency to be successful, BRICS countries would also need to adopt stringent fiscal policies to ensure stability and confidence in the new currency. This means maintaining low levels of debt, controlling inflation, and managing their economies prudently. Becoming fiscally responsible is unlikely for countries like Brazil and India. These nations have historically struggled with high levels of debt, inflation, and fiscal mismanagement. Implementing the necessary reforms to achieve fiscal responsibility would require significant political will and structural changes, which may not be feasible in the short term. In reality, the market will lead, and BRICS will follow by inertia and force, taking credit for it afterward. The public and the global market dynamics will drive the demand for a new, stable currency backed by gold and silver. As people lose confidence in fiat currencies, they will naturally gravitate towards more reliable forms of money. BRICS countries, recognizing this shift, will likely adopt the new currency framework to maintain their economic relevance. They will follow the market trends and then claim the success of the new currency as their own initiative, even though it was driven by broader market forces.
Look, in terms of timing questions, this is what I always say. Be prepared for it to happen this year. Have enough gold and silver wherever you need it to survive the immediate aftermath of a dollar collapse. It could happen any time. It could definitely happen this year. Is it definitely going to happen this year? Nothing is definite. And there have been a lot of people in this industry a lot longer than I have been, who've been in it for 30, 40 years and haven't seen the collapse that we've all been looking at, all been waiting for. But that said, look, all inflationary systems are exponential, all of them. And they all head in one direction, only one direction. They just go up and up and up until they go vertical. And we're on the vertical stick of that. I mean, they could theoretically stop and then just watch the pyramid fall and watch all their banker friends just go bankrupt. It's theoretically possible they would do that. They're too greedy and stupid to do that. They're not going to do that. When you're up against evil, you can just be sure that evil is going to continue until its logical conclusion, which is self-annihilation. Any kind of evil does that. So that's what's going to happen here. And right now, the Fed is trying to come off the exponential curve by stopping the printing, and we see the money supply falling. That's going to last until it doesn't anymore. Every time that's happened, they've had to reverse. Is it going to change this time? Is it going to be the first time in history that the Fed doesn't have to reverse after stopping printing? No, it's not going to be the first time in history. Everything that's happened before is going to happen again, just on supercharge. And we're just waiting for that turn. And exactly when it's going to happen, we don't know, but it's going to happen soon.